All right, you can hear me?
See.
All right. So what I'm thinking is for technical analysis, I think I'll just do, I'll work my way up, you could say, from support and resistance. Let me see. Let me see if Cross wants to join. So the company we're looking at here is Blink. And you'll notice something quite peculiar.
Everything looks normal.
They've been quite down and nothing but down for a while. This is the
I think they look pretty good.
This is like the pure definition of like an investment gone wrong. Hello.
Yeah, I'm listening.
What's up, babe?
What you doing?
I'm recording a lecture. Yeah.
Okay, well, call me when you're done.
Okay. Love you, cutie.
Love you.
You're so amazing.
Oh.
Shut up, Flora. Okay. Love you, darling.
You know, good.
Okay.
Hey, look, there's a pennant.
So this is like kind of a pennant. It's not really my favorite because really, like, this is more of a price kind of bottoms right here 3 times. So it's more of a triangle.
That's also over the course of an entire year. Oh,
see if I can...
oh, my eyes are bleeding.
This is what I look at every single day.
I don't understand.
Yeah. Let me just do that for you. Oh, wait. Here you go.
That's
So,
more tolerable. Oh, okay.
Let's see here. I like to look at daily time frames. All right. So here's the okay. So I'm gonna go ahead and use Roblox as the example. I actually took a game. I literally went gambling last week with my profits, Hunter. That's how good of a week last week was. I was gambling with profits. All right, so here's Roblox, and you know what we're going to be doing is we're going to be a little bit enthusiastic for the lecture, you know. Let's see here. So on a weekly time frame, we see that Roblox is very new. You know, Roblox hasn't been publicly listed for a long time. They just recently became publicly listed, and I was kind of surprised.
Whoa, I didn't even know that.
Yeah, so Roblox has a stock now.
Employee owned?
They are development. They are now like a I don't even know what to call it. They call themselves like some sort of like technologies and development company. Yeah, it was quite interesting, but you know, that's besides the point. So anyways, you know, what we're doing for Roblox here is we're actually going to be looking at, you know, support and resistance. And support and resistance are areas, they're never exact lines. They're areas where the price will go to and what I like to call bounce off of. Okay, so resistance is upper, is the price is a, don't even, oh, I need like the actual definition. Bear with me. No. Gonna make me mad. Okay. Oh my God. Okay, finally. I couldn't think of the words, but okay. So whenever I'm analyzing a stock, as you know, I determine my support and resistance levels. And so here's the thing, support and resistance levels, they're extremely subjective, but they also generally shouldn't be. A lot of the time you should, like one trader and another trader should, at the end of the day, determine very close and similar levels. Off by a few cents. Off by a few cents is fine. But at the end of the day, like support and resistance levels are fairly subjective when you get down into smaller time frames. But what support and resistance is it's areas where the price will respect multiple times. So, yeah, we could say this higher price up here is technically a resistance because it couldn't go past that price. It respected it and came back down. But it's not going to be a strong resistance because the price doesn't hit it multiple times. Eventually, it just breaks through. So this level can be used as a level. All of these peaks can be used as levels, peaks and valleys. All of these peaks and valleys can be used as levels, but the strength of those levels is determined by how many times the price respects it. And what I mean by that is how many times the price respects it. Well, we see here 1, 2, 3, even 3 bottoms right here on this level. We do have this break in between these 3, but this is a pretty respected support. We can pretty confidently say that this price is a pretty good support area. So if you were looking to go and take a position along on this, you'd basically play off of the support here. Okay, we see that it bounced, kind of consolidated, broke through. And that's what would make me nervous is this breakthrough that happened prior to this bounce off this level again. It's kind of like the break of structure. It essentially is like rejecting the support. It broke through it. Now, it did come close to respecting this level down here. And, support levels are always kind of generally a zone. So this area right here, it is a pretty big zone considering it's a $3 range, and dollar ranges are fairly large. But here, we see that price bounced off of the support. It respected the support. And if you had determined this level before, when you see that it respected it here, and you see that it bounced off that support, you generally think that it'd be a good time to go ahead and take a position here. As we see here, we'll also notice that this is kind of a zone that we're looking at, okay? And so this might be considered a decent support zone, okay? It's a support zone, or in other words, you'll hear the laws of retail in the stock market a lot, supply and demand. So this down here seems to be a bit of demand zone, support zones, demand zones. They're generally similar, but a lot of the time you'll hear a lot of traders determine the demand zones a little bit differently than determining a support zone. But we see here, we have these wicks and these candle bars that respect this area quite a bit, So if I wanted to invest or go long on Roblox, we'd see that it bounced off of this support here. So, I'd probably go long. Now, the thing is we are looking at a weekly time frame. So each of these candlesticks holds a lot more information than if we go down to, a 5-minute, where each of these is just a 5-minute interval. Whereas if we go to the daily, each one of these is a 1-day interval. Okay. So coming back to the weekly, we are looking at these levels right here. And, I like to mention that I like to use lines because it kind of simplifies, where the price went to. it kind of dumps it down a little bit, you can say. And we see here, this area right here seems to be generally pretty respected. It's a pretty strong consolidation zone. We have this quite a bit of consolidation here until it finally breaks to the upside. And you know, a lot of the time, the reason for this consolidation is because investors and buyers are kind of just determining the value. Now, don't take my word for it. You know, consolidation can lead to upside or downside. You know, a lot of the time you won't want to trade consolidation areas because it can be risky. So, you know, going back to the candlesticks, we see that we've got this level of resistance here, this level of resistance here, and these two support levels right here. Now, looking on this weekly time frame, the price up here probably will not come down to these levels. Now, it is bearish, so we could see this come touch this, and if it touches this and breaks it, will come down to here. So, like, there's a likely chance that it could come down here. But anyways, you know, we're looking at support and resistance. Whenever I'm analyzing a stock, I always look for these levels. It's always the levels first. And then I go and determine my trends, you know, and it's a simple, determining trends is as simple as this. You draw a line, and if it's going up, it's an uptrend. It's really that simple. It is. And if the line's going down, red, downtrend. Right here, we have a downtrend, small downtrend nonetheless. And we have this kind of consolidation period right here. It's a bit tighter right here, but right through here, right in here, this tighter zone right
Could
here.
that be considered a pennant?
No. So what we're looking at here is this area right here. You know, we do have this small downtrend per se, but at the end of the day, we do still have an intact uptrend. Okay, what we're looking at is still intact, because if we set two upper and lower trend lines, we can see that if this value can respect this lower trend line and continue, we still have an intact uptrend until this breaks this lower trend line, and then we have the downtrend, and the uptrend is no longer intact, I like to say. So it's pretty strong here. You know, we have some pretty, I would say, overextended green candles. We're seeing just a lot of buyer strength. And I like to preach that stocks don't follow the laws of gravity, but at the end of the day, they kind of have to, because in order for us to see more upside on a stock, it has to come down a little bit. Not 100%, but it has to come down a little bit. So, you know, this little area right here that we're looking at is a bit of a downtrend, you could say, you know, but the thing is in this uptrend, we want to see healthy pullbacks in order to see more upside. So if we wanted to see Roblox continue to $200, we couldn't just see straight green throughout the entire period, you know. So we have to see these healthy pullbacks, right? So, you know, big thing is I like to identify these major levels, and then I'll narrow it down, and then we can look at trends. So, you know, here we have a pretty intact uptrend. It's barely intact, I will say. It's really not looking good for this uptrend. And we actually do have a bearish pattern forming. And essentially what bearish means is going short on a stock, and going short means you're betting that it's going down. Okay. So we do have this bearish pattern here. There's a lot of different names for this pattern that we're looking at. I've heard a lot of people call it megaphone. I just call it ascending wedge. It's that simple. I always call my patterns names of shapes, because that's really all they need to be. It doesn't need to be some weird name like falling knife, jackknife, all these weird names that I hear people talk about. It doesn't need to be all that weird complication and like, oh, you're looking at a falling knife pattern. No. And to be honest with you, I don't even know what a falling knife pattern is. I know all of the patterns shape relative to shapes. So yeah, a falling knife pattern may look like a falling knife, but I'm never, if I ever see some sort of pattern, I'm never going to call it some weird name And that's just my opinion, like people can call a pattern however, whatever they want, but I just like to look at it like this is a ascending wedge. What we're also looking at here is not an ascending wedge, a broadening wedge. My bad, apologies. And then what we got here is kind of a descending wedge, kind of. So if this price right here continues to respect this lower trend line, we could see a break to the upside. But let's not delete all of this. So we identify these major levels, and then we can come down to shorter time frames and start looking at shorter time frame levels. So right here, we can see a bit of support here. Price kind of respects it. If we draw another line down here at this candlesticks, we could probably even say that this might be a bit of a zone right here that buyers like to buy it up at. We see it multiple times. This candlestick respects this level. These candlesticks stay in this level. Candlestick respect, stay in the level. See, pretty confident that we can call this a decent demand zone. We see it respect this level, this zone here multiple times. And then another thing I like to do is I always like to identify the high price, the all-time high for a stock. Recently, we've been seeing a lot of all-time highs, so it's a lot easier to identify these all-time highs. And main reason for these all-time highs is it's always a strong resistance. It will always be a strong resistance. And this is just known for as long as the stock market's been around, almost. For as long as support and resistance levels have been identifiable and anything of that matter, so we see here price hit all-time high and fell off, and now we're kind of seeing this bit of descending wedge here. And if we can see this price start to lose selling volume, we can probably see buyers step in and break out. And patterns has been essentially, I would say, I think the right word for it is enveloped. People that have been trading stocks for hundreds of years have been back testing these patterns. And so, whenever we know a lot of these big name patterns, it's because, well, we know historically that price action forms these patterns and likes to make moves at generally these patterns give us insight as to where the price could go next. So this price looks like, though it's a bit of a bearish pattern overall on a bigger scale, on the more broad picture, this may be a bit more bearish, but we do have this bullish pattern forming right here. And this bullish pattern could see a break to the upside and reject this bearish pattern, or it could be a fake breakout. So we're looking at an overall bearish pattern with a short-term bullish pattern. So we could still see this breakout for a short-term pullback and then sell off. So it could be what's called a fake out, because we have this overall bearish pattern with a short-term bullish pattern. And so, like I was saying, back to what I was saying, we determine these levels, and then we determine the trend. And there's always a rule of thumb whenever we're determining the trend. And you'll hear it a lot, is don't bet against the trend. So if it's in a downtrend, you typically don't want to go long, because, there's the chance that it bounces and you get a bit of a lucky play on a long position. But in a downtrend, sometimes sellers have control, so you'll probably lose your premium. And in case you don't know what premium is essentially the price that you pay for something. It's like insurance. You pay a premium for your insurance every month. And so, you pay a premium for your shares, you pay a premium for your contracts. So we do have this downtrend, but if we identify that it's a bullish downtrend and we'd want to go long, we wait for confirmation that it's bullish. We'd wait for confirmation that it's going to follow through with our analysis. Once you get that confirmation, then you can decide to go long. But until that point, you don't want to take a lottery on position just because you think it's bullish, like you need to have confirmation in order to take a trade. And that goes along the lines of having a trading plan. But back to what I was saying, once again, determining levels is one of the biggest things that I stress importance of. So right back to determining support and resistance. We see here, we have this bit of resistance right here. And I always draw my lines right on the bodies of the candlestick, right on here. I don't ever use wicks. A lot of traders do, because yes, that is where the price went. If you go down to a smaller time frame, you'll see that. Let me find it. Oh goodness. Yeah, price did go up here, right? But I don't use wicks. Now, wicks, they can be good for determining zones though, because if a wick will respect a zone or respect this area, then yeah, we can pretty confidently say it's a zone, just like I mentioned in here. Respect, 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 respect. Decent zone. Over here, they're kind of weak wicks, but at the end of the day, we do see a lot of respect in this major zone right here, right? So I go from top down. That's what I like to call it. So we start from the biggest time frame, weekly. I don't go any bigger than weekly. Down to daily, then down to 4 hour, and you'll notice you'll start to see a lot more candles the further you go down, and that's just because those candles start to hold less information. And then we'll start to look at potential patterns that are forming on these shorter time frames. So that was trying to get better at doing this. So we have this here, and I don't ever worry about my trend lines being exact, because they don't. Generally, it just needs to be a really close representation, right? So we have this price action building right here. And what I always do is I pretty much always draw my trend lines from tops. So my upper trend line is going to be from one top to the last top. This top over here, it's going to be down to that. And then my lower trend line is going to be from the from the first bottom to the last bottom, essentially. So, we see here, we have what's called these converging trend lines, or you'll hear me say converging support and resistance quite a lot, because these prices are getting more narrow. It's almost like the price is squeezing tighter. And historically, we know that if a price starts to squeeze, typically an explosive play will happen the tighter it squeezes. So, this could squeeze and break to the downside, or squeeze and break to the upside. But as we know, a descending wedge will squeeze tighter and break to the upside. And if you analyze volume, if you do volume analysis, you'll start to see right in here. I can't draw lines on down here, but I would if I could. We'll see here that this volume is slowly dying off. It's slowly dying off, and we see that it's the selling volume primarily that's dying off. Or no, I revoke what I said. Both buyers and sellers are dying off, so this is quite 50-50 right here. And how do I know that buyers and sellers are dying off? Because the green candles, these green volume bars are buyers, and these red volume bars are sellers. And we see here that the volume is slowly dying off, and it looks like sellers are kind of dying off. So it's kind of 50-50. I would say this is a bit of a risky falling wedge, just because we do have this 50-50. It's buyers, sellers constantly. But a lot of the time we see this dying off volume, and then you'll see volume pick up and break out. So there's even patterns on volume, believe it or not. You'll see it fall off and break out, essentially. That's how I like to look at it.
So if the sellers volume isn't dying off, but the buyers is, what should you expect in this scenario?
All right.
And
Yeah. So good
vice
question.
versa, if buyers was dying
So
off, but sellers wasn't.
say hypothetically we're analyzing this volume, and we see that it's buyers that are dying off. we can typically see sellers pick up because buyers aren't buying anymore. They're getting exhausted. That's how I like to look at it. This buying volume is dying down because they're getting exhausted. They can't keep buying anymore. They can't keep buying the volume up. So buyers start to sell off, or not start to fall off, not sell off. Sorry, don't let me confuse you. The buyers start to fall off. We'll typically see sellers pick up and take over. And that's a lot of the time how a lot of traders will determine support and resistance is with volume analysis.
Okay, so question. So with this wedge that we're seeing and up there, so it's kind of squeezing and it's on that downtrend in a way, and we're trying to determine if it's going to either explode up or explode down. We take a look at the volume.
So yeah,
And
that's how
so
exactly.
if the sellers are dying off, but the buyers aren't, we can expect that wedge to get tighter and then go up. But if
Right,
the
okay.
buyers are dying out and the sellers aren't, then we can expect that wedge to get tighter and explode down.
Yes, exactly. So yeah, if we're looking at volume, it's kind of hard to see, and you can see it a little more clear down here, but I can't draw trend lines on here. We do see sellers are really strong in this area. We see some buyers kind of step in a little bit, but sellers are really strong, and we can even see it on the candlesticks. But a lot of the time, you'll see the volume before you'll see the candlestick. And that's why I keep volume analysis on at all times. I can see these levels here. I can see the orders that are coming through. So yes, if sellers are dying off.
So if you're seeing a bunch of green volume, expect it to go up. If you're seeing a bunch of red volume.
Hold on. Okay. So listen, all right. We have this dying off, say it's dying off selling volume. Sellers are not able to sell anymore. They're not selling anymore. The sellers are starting to get weak. Okay. They're starting to get exhausted. You'll a lot of the time see buyers step in, and then the selling volume or buying volume pick up. So if we see that this is a lot of selling volume that's dying down, we do have a likely chance to see buyers finally step in and pick up buying volume. Okay, and vice versa. If buyers are slowing down and volume is no longer starting to get weak and exhausted, buying volume is getting weak and exhausted, we can a lot of the time see sellers step in and start to sell it off because the buyers they can't keep buying it up. So like right here, we have a lot of strong upwards movement. But at some point, the buyers got exhausted. They couldn't keep buying it anymore. They got tired. This marathon runner got tired. So it has to take a breather, and sellers stepped in, and it sold off. Selling volume picked up right here. I can pretty much kind of visually represent. Sellers picked up here. We have strong seller volume. We can even see it down here in the volume analysis. Strong seller volume. Buyers kind of try to step in this consolidation period here, but it continues to go lower. Buyers kind of pick up here, stay picked up throughout here. Sellers pick up, and you can see this constant, battle. Sellers get exhausted, buyers pick up. Buyers get exhausted, sellers pick up. It's essentially wherever buyers left off, sellers will pick up. Wherever sellers left off, buyers will pick up. So the reason I would call this falling wedge a bit risky is because we see buyers, sellers, buyers. It's very battled. I probably would go long if I got confirmation. So say we see that this volume right here, and boom, all of a sudden buying steps up and it breaks out of this like dying volume. And yeah, I'd probably go long because it's confirming that we could see a breakout and we could see strengths to the upside. But since it is 50-50, generally I would consider this relatively risky. Okay. And I see a lot of traders use a lot of fancy indicators. The most I'll use for an indicator is moving averages and RSI. And I don't even hardly use RSI. Whenever I'm taking day trades, I don't use RSI. But when I am taking swing trades, RSI can be helpful because that tells me if the price is overbought or oversold because of these upper and lower trend lines here. Oversold, overbought up here. And if we're going to go for a swing, we generally don't want it to be overbought because a lot of the times the price can't stay overbought for long. But that's besides the point. My point is I don't like using a lot of indicators because it crowds my charts. And you will hear a lot of freaking gurus come out and say, blah, 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 blah. All you need is this one pattern to make millions. I'm not going to feed you that bull crap because it's all bull crap. You know, yes, they are talking about patterns that are valid and are relative, but you should not rely on one pattern. There is a one pattern that I hear a lot. It's a 3-bar play. Yes, 3 bars. Oh, sorry. 3-bar plays work, but at the end of the day, if all you're waiting for is a 3-bar play, you probably won't get it. You know, I hear a lot of these stupid gurus talk about blah, 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 3-bar play. It's all you need to make $1,000 in 2 minutes. That's a bunch of baloney. And I'm not going to feed you some bull crap about how day trading is going to make you rich overnight. There's no get rich quick scheme. And day trading is just like anything else that anyone wants to do in life. If you want to be successful in life, you have to be able to be willing to put in the time and effort to be good at it. So, you know, day trading is not something that you should expect to be able to just make leaps and bounds. And all of a sudden you wake up and your account went from $1,000 to $1 million. No, that is not how trading works. And it should not be looked at like that. There's too many people that get into trading and they aggressively trade. They will put all of their portfolio into a position that is more than likely not going to go in their favor. You know, that's the thing about trading is it's really a game of buyers and sellers, and you don't want to risk this hard-earned money that you've worked for. Okay. Now I kind of lost my train of thought. Yeah, completely lost my train of thought.
You were saying what, like how you use moving averages and RSI lines and whatnot.
Right. Okay. Yeah. So yeah, I was just saying, you know, you'll hear a lot of gurus talk about blah 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 blah. You only need this or you only need that to rely on trading, and that's you know, at the end of the day, yeah, you can simplify your trading, but definitely don't listen to these gurus that give you unrealistic expectations. Okay. I just really don't want people to have this unrealistic expectation that they can make $4 grand off of one trade. Yeah, it's possible. But in order to do that, you probably have to capture a movement like this. You'd have to be captured in this in order to make that much of a big position. And too many people are trying to force trades, expecting the next leap, the next explosive play. You know, the thing is at the end of the day,
the majority of all your trades are just going to be smaller trades, right?
It depends on the setup. It really depends. That's subjective. A one trade could be explosive and swing trade could wake up and have 1,000%. It just depends on the setup. You know, if I think it's going to break out, it's all about my analysis. I can't ever really like give you a definite answer on that. I don't generally expect my trades to be small or big. I kind of just the big thing is I always expect to lose on my trades. I'm kind of always expecting that I'll lose, so that when they are winners, I let them run. And if they continue to run, great, more money. You know, generally, a lot of the time you'll want to trim and take risk off the table. You know, if you make money, it's never a bad thing to take profits. A lot of the time, people they always have this FOMO. You know, trading always dials back to FOMO. You never want to have a fear of missing out on a bigger play. I will preach this day in and day out that you need to stick to a trading plan the most successful traders do. They don't have FOMO. They're never holding or losing position. They stick to a trading plan. So anyways, let's get back to what I was saying. Whenever I'm looking and analyzing, I pretty much stick to a very basic, I don't even know the, I guess you could say philosophy. I stick to a pretty basic form of trading. It's, I identify my levels, I identify patterns and identify trends, and I wait for a confirmation that's going to go in my favor. So let's fully thoroughly analyze Roblox, like I was saying, okay? We've got this falling wedge here. So I'd probably anticipate a break to the upside, right? So I'm gonna identify as many levels as I can on these bigger time frames. Now, I also want to preach that you have to be able to understand your chart. If you have line going crazy, like you'll see me have all of these lines everywhere. And, to some people, they might not understand what I'm looking at. That's totally fine. I understand what these levels mean, right? I know what these levels mean, and I know what they do, and I know how the price reacts at these levels. So you'll see me have these thousands of lines, but I can read it, and I know what all of them mean, and I know what all of them are for. So back to Roblox, we do have quite a few lines already, right? And once you're able to determine support and resistance, you can trade. That should be how simple it is. But at the end of the day, people complicate it a little bit too much. There's a little bit too much complication. So I do definitely want to try and preach that trading should be simple. Anyone can do it, but no one wants to do it because they're worried about losing money. They're worried about gambling, all of that. At the end of the day, traders such as myself get pretty annoyed whenever I hear someone say, well, it's pretty much gambling. No, because at the end of the day, us traders make a living doing this. And yes, there are professional gamblers, but at the end of the day, majority of those gamblers aren't necessarily doing it for a living. They're just doing it as a hobby. I doubt that most of those gamblers are making a living doing it. Now, if they're going to tournaments and they're making money from the tournaments, yeah, they pretty much have a hedge to prevent them from losing on their gamble games or whatever. Well, I don't even know what gamblers do, but that's besides the point. Traders have a lot more of an upper hand. So at the end of the day, trading should not be put on the same level with gambling because we have so many things that we can use to our advantage to essentially gain insight and have the upper hand, right? So like I was saying, determining these levels, you can pretty much play your support and resistance levels. A price hits resistance, you can go short. A price hits support, you can go long. Now, there are some things that kind of sound counterintuitive to that, though. You identify a support. If price breaks that support, you can go short. Because if it breaks support, then more downside is foreseeable. And if it breaks resistance, more upside is foreseeable. And you can play, if a price can break up resistance, there's typically a lot of buyers, and you can still buy in at a resistance break. Resistance breaks, and you identify the next few levels that it could retrace at, and you set your trends and take profits. Same thing goes for if it breaks support. Now, if I were to play something like this, I would generally look for this price action in this zone right in here. We see that it's actually respected quite a bit in this zone here. I'm going to call this the demand zone, right? We'll make this orange, kind of label it. We have this demand zone here. If price can respect this and show some strength and volume and price action, then I would probably play this as anticipation of a breakout play with the potential of it hitting up here. So I would probably take an entry on this level if it showed signs that it was going to continue. So if it respects this level and bounces, then upside could be foreseeable. We could see a break to the upside. I do know a lot of traders wait for a breakout through upper trend lines. My philosophy is I don't really like doing that because sometimes once the breakout happens, buyers lose strength. And that's how I look at it. That's why I don't buy. I will play breakout plays that break out past support or resistance. I will play those. Don't get me wrong. But I don't like playing those because a lot of the time price gets exhausted shortly after, if not immediately after. Sometimes price can break it and you can play it. And yeah, it could continue up and buyers could stay strong, but a lot of the time you'll see it retrace pretty quickly. So yes, I will hear traders that, talk about waiting for a breakout, then retrace, and then take an entry and things like that. But a lot of the time I'm looking for price action to respect my levels with confirmation on volume, right? Volume looks good. Volume analysis looks good. These two look good, and they respect.
Your internet just died.
Are you serious?
Yeah, you sound like a robot having a seizure for a solid 10 seconds.
All right, you can hear me now.
And
You're
your
good.
screen kind of froze. There you go again. You're dying again.
It's saying my internet connection is unstable. That's not good. All right, can you hear me?
Yes.
Is it raining? Hold on, did it start raining? Sorry. I'm intrigued by this. No, it didn't. That's why I see. All right, sorry about that. Okay, so everything's good.
No,
Y'all
that's
are
my
good. You can
AC.
hear me? It sounds like it's raining. It sounds like it's hitting my roof. So yeah, connection's good now. You can hear me good.
Yeah, for the most part.
So the way I play is level respecting. Respects my levels, I play those levels. So if a price respects my resistance and rejects it, I'm probably going to go short. And if it respects my support and bounces off my support, I'm probably going to go long. And reason being is because me personally, I want to maximize my profit. And a lot of the time you will hear people say like, you need to not worry about maximizing profit, rather minimizing losses. And yeah, that's true. But whenever you want to capture a movement to its fullest potential, it's all about determining levels. So traders probably will wait for this to retrace and bounce, okay? Well, if I get in on this level to be respected and I go long anticipating a breakout to the upside, well, I can pretty confidently say that if it breaks out and retraces and respects this area, it means buyers are liking it and they're going to continue to step in. So my big thing is my big philosophy is I like to maximize essentially, I don't know how to word this. I like to maximize the upside here. So whenever I don't like playing these breakouts past resistance and support, because a lot of the time, depending on the movement, won't be maximizing your profitability. So let me, 1 second. So, and yeah, if it's overall bearish and it breaks support, a lot of downside could be foreseeable. It just depends, and that's just how I like to play it. I like to play it based off of respecting my levels. So as we see here, price respects it multiple times here. On the 4 hour, we're looking at a falling wedge. I'll go down to 2 hour, 1 hour. I don't go much further past 1 hour for determining levels generally, but at the same time, I kind of do. That sounds kind of counterintuitive, but I don't like determining levels all the way down here at the 5 minute. We can see here on the 5 minute, like we do have this right here. Boom, 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 hits it quite a bit. But a lot of the time, the shorter the time frame you go, a lot of the time, shorter time frames means more rejected analysis. We'll have people go down to a 1 minute time frame and identify an inverse head and shoulders, literally what we're looking at right here. And so, you know, on a 1 minute time frame, identifying a inverse head and shoulders. Now, for granted, this inverse head and shoulders on the 1 minute was respected, but these shorter time frames hold less information. So these patterns will get invalidated a lot more. So 5 minute is what I like to stay bare bone, like that is the lowest I'll go. And we see here, 5 minute patterns typically do play out and typically are a little more respected. We do still have this inverse head and shoulders structure right here on the 5 minute, which does explain why it was respected and kind of continued to go up. Kind of rejected this line right here, but anyways, you know, we have a 5 minute here, and we do have these short-term patterns, and short-term patterns, they can play out. You know, a lot of the time I will go down to a 5 minute and say 5 minute pattern forming, and they typically do play out, but they do get invalidated quite a bit. You know, so you could identify a bearish pattern on a 5 minute chart that gets rejected and vice versa. So I'll go down to my hourly and I'll look for some more key levels. I don't really see too many more. We might have a bit of one right in this area, kind of. We see bounce, kind of bounce, bounce, kind of run off in here a little bit, you know. Get rid of this lower trend line for now. Let me get rid of these trend lines for just a second. This level kind of respects this support zone right in here. Let's see here. And, you know, another thing that I'll like to do for scalp trading specifically, scalp trading relies on a lot of key levels. Now, I do generally have a lot of predetermined levels, but reason being is because these are retrace levels that I typically look at. So with Roblox, if I'm looking to scalp Roblox, I'm going to be looking for really short, really close time frame levels and a lot of levels. So I'm going to be looking at highs and lows of just about. So I'm going to be looking at high here, low here. We're going to be looking at really tight highs and lows, because a lot of the time, these really tight highs and lows, price will retrace it. And you know what you can do is you can further confirm these levels by drawing a Fibonacci retracement. Now, don't ask me what Fibonacci means. I don't know off the top of my head. It's a mathematical equation. I couldn't tell you what Fibonacci means off the top of my head, but what I do know is it's a good drawing to use for determining some retracement levels. Oh, move that back. So you can determine all of these levels, and generally, a lot of these levels can end up being a support or resistance level. All of these prices generally get respected at the end of the day. But you know, that's kind of, yeah, you could look at any time frame and say, oh, that value or level was respected. So you know, we're determining my levels on the hourly. I might go down to a 30 minute, maybe look for some more levels. But at the end of the day, you really don't want to have too many levels, because I've heard it from even some traders recently that they'll hold a losing position looking for another support level. There's always that next level that it could bounce off of. There's always something, you know, there's always another moving average. There's always another indicator. There's always something to try and, you know, indicate that you should hold your long position that's losing or your short position that's losing. At the end of the day, I'm going to constantly preach that you have to stick to a trading plan. That is what successful traders do. If you don't stick to a trading plan and you're not a disciplined trader, you are going to get burned and you're going to lose your portfolio. Okay, if a play hits my stop loss, well, my stop loss was in my trading plan. It was in my equation. I took it into account that if it hits my stop loss, then it invalidated my analysis. And the thing is I always have stops because I'm never worried about price. Like, I'm never worried about missing out. There's always another opportunity in the stock market to take. Now, if my stop loss hits and my analysis is invalidated, short term, I can look for another entry. I can always get stopped out and look for another entry. At the end of the day, you know, you got to look at it like, if you get stopped out, so be it. It's the past. You can't change the past. You cannot change the past. So you got to determine your future, essentially. So, you know, if I get stopped out on a long position or a short position, I will either look for another play on another ticker, or I'll look for a re-entry if I think that that play will still respect my original analysis. Now, a lot of the time, my stop loss is set in an area where my play will have room to play out. I'm willing to lose a little bit if I think that that play plays out. And if it doesn't play out and respects my analysis, well, I have this stop loss in place in case it invalidates it. And, you know, I generally try to avoid placing stop losses at certain percentages because sometimes a play needs 50% of room to wiggle. Now, that is kind of a big area. That's quite a bit of wiggle room. You know, a tighter stop loss and a more comfortable stop loss for a lot of people might be a 20% stop loss. But if you're willing to risk 50% for a play to be able to play out and have good upside, then you should have your stop losses set accordingly. Now, I don't set percentages. I always do levels. I always determine my trade plan off of levels and patterns. That's how I do it. We have these determined levels here. I can look for short-term patterns to play out. Sorry.
Hey, Austin.
What?
I'm gonna have to hop off.
All right.
But
So yeah,
you're recording, right?
Yes. I'll go ahead and wrap it up here
Okay.
then. You know,
Okay.
I just want to preach that trading is simple. If you can determine levels, patterns, in volume, just look at these things, you can pretty much trade, right? So here, for example, this is kind of a bearish pattern that's forming on the 30-minute. So I'd probably be looking for a break to the downside. So after determining some strong levels, and I'd like to go short on this short-term pattern, maybe I look for it to break one of these levels, right? So another thing that I'll do is I'll throw this up. I'll draw some levels here, and I'll look for the price to break those levels if I wanted to go short, and I'll look for the price to break those levels if I wanted to go long. And I think that pretty much sums it up for technical analysis and support resistance. It's all about looking at areas where the price respects it, bottom and tops, and that's your support and resistance. And at the end of the day, you really can play off of support and resistance. That's how simple it can be. I know a lot of really sound and seasoned traders who only play support and resistance. It really is. And I like to say that I only play them too, but generally I play patterns and levels. You always got to play levels. That is one of the biggest things. And yeah, so I mean, it's all about determining your levels. Your levels are the strength of those levels is determined by how many times the price respects it. So if it respects it multiple times, you can assume that it's strong, and you can assume same goes for support or resistance. You know, so yeah, I think that really wraps it up. I think that was a pretty solid lecture, actually. Hope you got something from it and took something away from it.
Yes, I did.
I will be posting this this will be the first duck lecture. So I will have this posted to YouTube.
Let's see.
Awesome. Well,
Okay.
I think that was solid.
I really do have to go though.
All right. Adios.
Okay, adios. Bye bye. Bye bye.